morning everyone. I am here to discuss wealth creation by mutual funds or roadmap. Wealth creation is basically a process of investing in various asset types, and the aim and objective of wealth creation is to meet personal financial goals. And as we have discussed in the previous lecture, mutual funds are the best instrument for creating the wealth because they are ideal for each and every scenario and each and every investors, and they are the best and ideal for busy professionals like us. So these are the steps of the roadmap, and we will explore them one by one. First of all, we need to decide what are the various our financial goals or the life goals for which we need to accumulate the corpus. The typical goal can be like buying a home or clinic or hospital, or planning for our children like their education or their marriage, or sometimes we need to plan for retirement also, and we need to buy a luxury car or going on a foreign vacation. So these are the typical life goals for most of us. Once we have decided our life goals, we need to set the time horizon. How much time do we have, right, to accumulate the corpus to fulfill that financial goal? So we can make such a timeline as I have shown in the slide. Then comes the most crucial part, selecting mutual funds, right? So mutual fund selection is basically, now we have to answer three questions. First is which categories we need to choose, what schemes we need to choose, and how to select these schemes. So first of all, let's see which categories we need to choose. So if your goal is nearby, right, it is within 3 years from now, then it is known as the short-term goal. Suppose you want to go on a foreign vacation just after 2 years, so that is a short-term goal, and for that you need to accumulate your money in the debt mutual funds. But suppose your goal is about 7 years away or more than 7 years away, suppose we are planning for retirement, then equity mutual funds are best vehicle to invest, and other goals are intermediate or medium-term goals, and hybrid mutual funds are better for them. Now coming to the next part, we have decided the categories of the mutual fund. Now what schemes we need to choose? So then again it is very simple. If you want to go for debt funds, if the goal is within 1 year, you can select the liquid funds. If the goal is 2 to 3 years away, you can select the short duration or low duration funds. In hybrid duration, that is the 4 to 7 years, you can select balance advantage funds or aggressive hybrid funds. And if it is the goal is more than 7 years away, you need to select the equity mutual funds. And in equity mutual funds, you can have a large cap funds, mid cap funds, as well as small cap funds. And the allocation should be, there should be 50% of money put in the large cap funds, 30% in the mid cap funds, and 20% in the small cap funds. And there is another category known as the flexi cap funds. Yes, ELSS, the equity linked savings scheme, which are basically tax saving mutual funds. They are a type of a flexi cap funds. And they behave like a large cap because most of the time they have more than 50% exposure to the large cap stocks. And this is the model portfolio for most of us. If you are investing in the equity linked savings scheme, then you can have 1 large cap or 2 large cap funds. Along with that, you can have 2 mid cap funds, 2 small cap funds, and 1 Nifty 50 and another Nifty Next 50 fund. But you are not opting for the ELSS because you are investing in PPS. Then you can have 1 large cap fund and 1 flexi cap fund, and remaining thing will remain same. So this can be the ideal portfolio for most of us. But now comes the main part. How to select the fund? We have decided the category, we have decided the scheme also. But finding a mutual fund, a good mutual fund, is very difficult because there are more than 900 equity schemes. And finding a proper fund is like finding a needle in a haystack. So we have devised a criteria named as a SAFER criteria. These are our indigenous criteria, right? SAFER is basically a mnemonic where S stands for size of the fund, that is the AUM of the fund. A stands for age of the fund. F is the fees or the expense ratio. E is the efficiency. Efficiency has 2 parts. One is the alpha and another is the Shortino ratio. And last part is जिसमें हम सबको रस होता है, that is the rolling returns, right? R. Now, if we go to the particular website known as Value Research Online, it has a fund screener option. In a fund screener, once you select the fund category, here I have selected flexi cap funds. In a snapshot part, you will get the net assets, that is the size. You select the fund which is more than 1000 crore. Then go for the age, just column besides that. Select the funds which is age more than 5. And third is the expense ratio, where expense ratio is less than or equal to 1%. So in these 3 steps, you have to filter out other funds and only select funds which are fulfilling this criteria. Then comes the next part. Go to the risk tab. There you will find alpha. You select the funds which you have filtered out from the previous 3 steps. Find the fund which have alpha of more than 1, and then from the remaining fund, just sort them from the highest to lowest sorting ratio and select the top 3 funds. Once you have done this, go to the advisor coach website. There is a MF research, rolling return versus category option. Put the name of those 3 funds along with certain basic details, and you will find such a beautiful graph of the rolling returns of the funds. And from this you can find out which fund is performing better. So this is basically the SEPA criteria. Then comes the 4th step, VIZAG investment amount and the frequency. Here some part of maths come, right? Basically whenever we have certain goals, I have a goal to have a weekend house after 10 years and it is costing me 50 lakhs rupee right now. Then after 10 years, basically, if I consider 6% inflation, that same house will cost me 89 lakhs 50,000, right? In the future, because of inflation, the rates will increase. So I need to calculate how much monthly investment should I do, right? Every month in SIP form to accumulate that 89 lakhs 50,000 in that 10 years. Now, for this we can take help of online calculators. There are many online calculators. I have shown one example of advisor course goal setting calculator. Once you put all the details, these are just basic details, you will get the amount monthly SIP which you need to do to accumulate that particular goal, right? And remember that when we are planning for the education, children's education, we need to take inflation at the higher level, because mostly otherwise inflation is in tune of 6 to 7%. But in cases of education, we need to take inflation at 10%. And there are so many retirement planning calculators are also available online. This is one I have shown. This is from the Kotak Mutual Fund, but there are many others also. You just put the basic details. For that, you need to have how much monthly expenses do you have, and once you put that, you will find details regarding the SIP which you need to do to accumulate the retirement purpose. And investment frequency, it is very simple. By rule, in the equity funds, you need to invest by the monthly SIP only, and you can add lump sum whenever you have extra money. And in debt funds, most of the time we invest by the lump sum manner. But someone like me, maybe I may be very busy, or I may be very lazy also, and I am not going to plan anything. I don't like goal setting and etc. etc. Then what should I do? Right? This is the simplest financial plan. If you don't want to do any type of goal setting, just invest in equity, debt and gold as the percentage shown in the slide. This has been previously discussed by Dr. Pranav also. You put 100 minus 8% in the equity funds, age minus 10% in the debt funds, and 10% in the gold funds. And this is the simplest financial plan. And even if you are super lazy, you don't want to invest in equity, debt or gold also, then there is also option. Mutual funds are everywhere. You can invest in the balanced advantage fund as well as multi-asset allocation. Just choose these 2 funds and your financial planning is done. And now the step 5, start and continue investment as per the plan. It looks simple, but it is not that simple, because most of the time we cannot start investment or we cannot start financial planning because we have a lack of conviction, we have analysis paralysis, or sometimes we procrastinate also, the bad or we even may not able to continue, right? Because there are so many ups and downs in the market, and we might have a fear, we might have a greed, or sometimes we might have biases also. And sometimes even if we have decided the plan, we cannot stick to the single plan because we might be overindulging ourselves into the financial planning, and that is why plan keeps on changing. So we have to remember that have patience, consistency, and discipline to succeed in the financial life. And these are the various options to invest into direct MF. You might have a demat option. You can go through the demat account also. Or sometimes there are other MF Equity, MF Central, CAMS Carly 2 website or applications. There are so many third-party applications are also available for the investment. And last part is the monitor and review. Once in a year you should look up how your fund is doing and step up your SIP by 10% every year. If possible, you can invest by lump sum also, SOS, and exit when the goal is near. But remember that the top mutual funds changes every year. So don't chase topper, always choose safer. Because even if your fund which you are investing in is not in the top category of the mutual fund, don't worry, because there is a musical chair going in mutual fund industry and toppers keep changes every year. There was a one famous tagline, feel it, set it, forget it. This tagline is perfect for mutual funds. Feel it, ensuring that there is no adulteration. Set it, ensuring that there is no leakage. And forget it, ensuring that there is no remnant. So this is the process. Start early. Always go for combination of debt and equity. Always go for direct and growth options. 8 to 10 schemes of different mutual fund houses are enough. Do regular long-term SIP. Review and increase your investment every year. And exit only when goal is near. And don't interrupt the process unless it is absolutely necessary. So I wish you swim karo, push raho. Swim means systematic wealth creation by investing in mutual funds. Thank you.